Hi, welcome to today's awesome class. Welcome to today's awesome meeting. Now, today I'll be teaching us on something very important in the forex market. Something very cool that will yield a whole lot of money for you if you know how to use it judiciously. Now, before I go ahead, if this is your first time visiting this channel, do well to subscribe, like, share and comment below in order for you to receive more videos when we release them. Now, gaps in the forex market. I know some of us that have been trading, whether you're trading your forex currencies, whether you're trading your stocks, Amazon stocks, Facebook shares and the rest, whether you're trading your metals that has to do with gold, silver, whatever you're trading. I know in one way or the other you've seen things like gaps in the market or gap in the market, let's say a candlestick forming then leaving a space to the upside, start forming from there, or forming downward, leaving a space downward, forming from below. You've seen things like that and you decide to ask yourself, how, why are these things forming, what does it mean in the market? Now, they are not just ordinary gaps. If you know how to use them profitably, use them judiciously, you're gonna make a whole lot of money. Gaps in the market, everything that happens in the market is an indication in the market. It's passing a message to you whether to buy or sell. It's trying to pass an information on what is happening between the buyers and the sellers. So gaps in the market is a very good indicator in the market. It's a very good, if you understand how to use it, it's going to give you a whole lot of money in the forex market. So before I go ahead, we'll go to things to note about gaps in the market. Things to note about gap in the market. It shows imbalance between buyers and sellers. Gaps in the market shows imbalance between the buyers and sellers. For you to receive a gap in the market, whatever you're trading, whether you're trading the stocks or the currency markets, for it to happen, for you to see that particular space, in the market, it actually shows imbalance between buyers and sellers. Two, when a gap opens to the upside, it shows there was zero selling pressure at that time. When you see a gap opening to the upside, it shows at that particular time the market opened to the upside, shows there was no selling pressure to fill the gap at that particular time. Let's say you are using your D1 time frame or your previous daily candlestick for yesterday, open, close properly, and today you are seeing a gap to the upside. It's actually trying to tell you that there was no zero sellers at that particular time, zero selling pressure at that particular time. If you understand what I mean, if you understand price action, you should be able to decode what is beginning to happen in the market. Now, when a gap opens to the downside, it shows there was zero buying pressure at that time before the gap down. When you see a gap opening down like a space, market in a bearish trend or in a down trend, selling, then it gets to a point you see it leaving a space to the downside. It's actually trying to tell you that in between that space there was no buying pressure, there was zero buying pressure. Nobody was willing to buy at that price. That was why the market gave a gap to the downside. Let's say the previous day market closed properly, a good bearish candlestick. Now today the market was supposed to open at the same price it closed yesterday, but it gave a gap down. It actually shows that no buyer was interested, there was zero buying pressure at that particular time. That was why it gave a gap down. A gap indicates a high impact news affecting the market which market never expected or was expecting. Now let me explain this. A gap simply shows or trying to tell you that most times when you see a gap in the forex market, it's actually trying to tell you that, oh, there is a news coming out. When a high impact news shaking the market is released, you see a gap in the market. When a very high impact news shaking the market, whether the market is, especially when the market is not expecting it, especially when the market is not expecting it, when you see most gaps in the market, especially during your active session, which is the London and US session, you see a gap opening to the up or the downside, especially your lower time frame. It happens mostly when the market is not expecting it, just like your breaking news. Probably a president of a country, probably during a pandemic or got a pandemic, or president, especially world president, or a news, a very high impact news that the market is not actually expecting. Breaking news affecting the market. And most times too, news that the market is expecting, you also see gaps in the market. Now, number 5, a gap shows trades from big boys or big bands during the weekend. Now, let's say for those of us that trade the forex market, you know forex is 24/5. You trade Mondays, Tuesdays, Wednesdays, Thursdays, Fridays. Then Saturdays, Sundays, no market. Saturdays, Sundays, no market in the forex. No market for you that is trading. Depending on the broker you are using, no market. You don't trade Saturdays and Sundays. Now, the big boys trade during the week. The big boys, the major market participants, I'm talking about the banks, and the big boys, those are them that trade with large capitals. They trade during the weekend. So gap passes a whole lot of information to us. Now, for me to go ahead, there are two types of gaps in the forex market. Two types of gaps in the forex market. Now, before I talk about this, remember to like, subscribe, comment below, share to your friends. By the time we send more videos, you will be able to receive them. Two types of gap in the forex market. We have the professional gap and the novice gap. Professional gap and the novice gap. Professional gap and the novice gap. Now, under the professional gap, we have two types. We have the bullish professional gap and the bearish professional gap. Now, before I even go ahead talking about whether the bullish professional gap or the bearish professional gap, the question now is, what is a professional gap? These are gaps that open at the beginning of a trend. Let's say you see markets buying, or let's say market is selling. Suddenly you start seeing the market reversing. Then before going into that bullish direction, which it has reversed to, you see a gap towards the bullish direction. The professional gap always show continuation. You always spot it at the support and resistance zones, at your zonations in the forex market. It always shows continuation in that opposite direction it has started. You see a market selling. Suddenly, just like this, just like what you find here, the market must be selling. Then getting here, start reversing. You see it opening a gap to the upside to establish a bullish trend. It actually shows continuation. Every professional gap shows continuation in that opposite direction they've established. So initially, the market, if it's we have two types. We have the bullish professional gap and the bearish professional gap. Now, what you can see here is the bullish professional gap. Initially, the market must be in a bearish trend. Then you now start seeing probably a consolidation or whatever in the forex market. Then a sharp turn giving you a reversal pattern or whatever pattern. But that pattern that it has given to you, showing that the market has changed for a bullish direction, or you see the market changing for a bullish direction, you see a gap opening at the beginning of that bullish direction. That is known as a professional gap, and it shows continuation for the buyers. Whenever you see it, there are two ways to trade it, especially the bullish professional gap. There are two ways to trade it, just like what you see here, giving a gap to the upside. You either wait for the market to come fill up the gap and continue the buy, or you wait for consolidation and the break above before you continue the buy. Then we have the second type, known as the bearish professional gap, the bearish professional gap. You see, you can see the market buying, getting to this place, forming a double top here, then trying to establish a downtrend. You see a gap down in the opposite direction, a gap down, showing that the trend is about to reverse. It's known as a professional gap, and it shows continuation in the market. And what do you see? You see the market selling. This is known as a professional gap in the forex market. Then we also have the other type of gap known as the novice gap. Novice gap in the forex market. What is a novice gap? Novice gap is a gap that occurs in the direction of a trend, not opposite. Let's say a market has been selling, just like what you find here. Selling. Suddenly, towards a support zone, you see a sharp gap down. You spot a sharp gap down towards a support zone. It's trying to tell you that soon the market will reverse for a buy, especially towards the support zone for the bearish, for the bullish novice gap, especially towards the support zone. You see a market for a bullish novice gap to occur, you see it, market selling. In that bearish direction, you see a gap down. In that same selling market, in that same bearish market, it's trying to tell you that soon, especially towards a support zone, it's trying to tell you that soon this market will go long or this market will buy. So towards that support, just expect the market to reverse soon. It can give a consolidation, it can give whatever pattern it wish, but at the end of the day, you see a reversal. It's trying to give you a clue in the market. So these things are very cool in the forex market. Understanding them is a plus to you. Then we also have the other one, the bearish novice gap. You see a market buying. But towards the resistance, or trying to get a resistance zone, it gave a gap up in that same bullish direction. It's trying to tell you that soon this market will do what? Will reverse. This is a leading indicator in the forex market. Don't start selling if you see the bearish novice gap. Don't start selling immediately. Wait for confirmation before you enter the market for a sell. You can see this is a leading indicator in the market. Personally, I use it. Most traders use it. Understanding gap alone will give you a lot of money in the forex market. Understanding gap is a whole lot of money in the forex market. So as a way of recap, let's go over it again. Remember, we treated gap in the forex market. Then things to note about gap: it shows imbalance between the buyers and the sellers. When a gap opens to the upside, it shows there was zero selling pressure at that time. When a gap opens to the downside, it shows there was zero buying pressure at that time before the gap down. A gap indicates a high impact news affecting the market, which the market never expected or was expecting. You see a breaking news coming out, something suddenly happened like earthquakes and the rest. The market was never expecting something like that. You see the gap towards the upside or to the downside. A gap shows trades from the big boys or big banks during the weekend. You wake up on Monday morning, you see a gap. Oh, what is happening? It shows trades that occur during the weekend from the big boys. Two types of gap in the market. We gave professional gap and the novice gap. So what is a professional gap? A professional gap is a gap. I said it, that a professional gap is a gap that occurs in the opposite direction of the trend. Let's say market buying, trying to reverse. Before it reverses, before it starts selling, there must be a gap down, or there must be a shoot down. There must be a gap down or a shoot down, indicating a selling pressure in the forex market. Then a bullish professional gap, you see the market selling, 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 just like what you find here. Just like what you find here, the market selling, 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 selling. But about the time it starts to reverse to the upside, about the time it starts to reverse to the upside, it opens with a gap to the upside, boom, leaving a space. It shows that there will be continuation in that opposite direction. Now, we also shared with us the bearish professional gap. A bearish professional gap occurs in the direction. Okay, this bearish professional gap, yes, it's still in the opposite direction. You see a market buying, 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 buying. Then about the time it starts to reverse, it shoots downward, giving a gap downward. It shows continuation towards the opposite direction. Then we have the bullish novice gap. Novice gap always occur in favor of the trend. Novice gap always occur in favor of the trend. You see a market selling, 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 selling. Before it gets to a support zone, which is the demand zone, it gives a gap towards that support zone. It's just trying to pass information to you that there is possibility for the market to reverse for a buy, probably through a consolidation or whatsoever. Market will soon reverse for a buy. Then we have the last one, the bearish novice gap. Occurs in the direction of the trend. The market buying, 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 buying. Towards the resistance, it gives a gap to the resistance, showing that the market will soon reverse to sell. This is a very wonderful trading strategy. A very wonderful trading strategy needed for everybody. Remember to like, subscribe, comment below, so that by the time we upload more videos, you will be able to get them. So go through the video over and over and over again. Alright, bye. Love you.